right, you want to jump into her?
Yeah, man, I'm ready.
This week on the Dirty Daily podcast, we've got Durden in the ring representing the top revenue earning protocol in Solana DeFi, Lifinity. Welcome, sir.
Hey, thanks for having me.
You betcha. So before we jump into things, why don't you give me a little bit of the TLDR on how you got into crypto and then how you found your way to Lifinity?
Sure. So I bought my first crypto in 2017. Didn't really do much back then, just like bought and held. I started actually using DeFi and other on-chain things in like 2021. I first did like very basic stuff on Ethereum. Soon after, covered Solana, tried things there, and the UX is just night and day. So I started being more active on Solana and never looked back. And let's see. I was lurking in the Lifinity Discord, asking questions and stuff. And after a while, the team asked me to join them. So that's how I came to work for Lifinity.
I mean, you grinded your way into it. That's awesome. What's your background as far as like, are you coder, tech, BD? What's the story?
I can code some Python, but I've never worked as a dev. I studied mathematics in university, so I have a math background, I guess. So that definitely helps in crypto. But and I played poker semi-professionally for a few years. So that also has helped me in understanding crypto.
That's something I hear quite a lot. Ex-poker turned crypto, or even still current poker, also crypto. Numbers guys.
Yeah, I think the poker world started to dry up after a while. Rakes getting higher, fewer fish, many more competitors, and then people just switched over to crypto. It's just much easier over here.
Back into the easy lane. Let's hope we got one more easy lane cycle. Although, I say that, and I've been through 2 other cycles, and I still haven't really won one. So, I mean, yeah, it was easy, but it was also easy to fuck it up.
Yeah. I guess, you don't want to be too active. I mean, nice thing about crypto, at least from my perspective, I'm not like an active trader much or anything. Like mostly you just find like a decently legit project and hold on to it for like a long enough period and like you'll be good basically.
So true. Sage. What more can you tell me about the team at Lifinity? I know you guys are anonymous, so can you tell me a little bit more about the founding team and anything like that?
Yeah, sure. So like I said, I joined a little bit later. We have 2 devs who are the founders of Lifinity. They worked as coders for a bunch of years and they worked a few years as traders in crypto. So they do have a background trading. And I think about 6 months before they hired me, they had the idea to build Lifinity, so like an Oracle DEX.
Mm-hmm.
And so they started building that. Also hired a designer. So yeah, the core team members on our team, there's 4 of us. And we've occasionally hired some part-time people as well. Right now we're back to the original 4. Small team, small and nimble. We try to move fast.
That is a small team. That's perfect timing to jump into it. I like to try to find out as simply as possible. How do you explain Lifinity to a new crypto user, who's just trying to make a buck and not get rugged in the process?
Sure. Yeah. So I guess usually when I'm explaining, I would hope that they have like a basic understanding of at least what a DEX is. So I don't explain from the
Let's definitely go on that assumption.
Okay. Yeah. So usually most DEXs are either of the constant product variety, which is like the very first successful iteration. Uniswap V2 for people who are familiar with that. And that one, it provides liquidity from 0 to infinity, but the liquidity is not deep at all. So it has some upsides and downsides to it. And then after that came the concentrated liquidity market maker, where users can decide the range in which they want to concentrate liquidity. But that comes with greater risk of impermanent loss. So most DEXs are like that. Ours is kind of similar to a concentrated liquidity market maker, but the big difference with how Lifinity works is that it uses an oracle to determine the price. So normally, the way the price is determined is just based on the balance of assets in the pool. Whereas with Lifinity, it does adjust the price based on the balance of assets it has, but the primary function it uses to determine the price is through the oracle. So what that means is that it's getting its price from elsewhere, primarily from centralized exchanges. And the reason for this is because for most major assets, the bulk of trading volume occurs on centralized exchanges. And a consequence of that is that price discovery happens on centralized exchanges. And some people might have heard over the past few years about things like MEV and toxic flow and arbitrage, um, and how this constant product pools and concentrated liquidity pools tend to suffer from this toxic flow where they're arbitraged between centralized exchanges. And this, you could say, is the source of impermanent loss. And so people may have also heard like how it's often like not great for LPs because the impermanent loss they experience is often greater than the fees they generate. So on net, like they would have been better just holding their assets instead of providing liquidity.
Especially on like a Unity v3 where you've got added high expensive L1 fees on Ethereum network.
Yeah, for sure. Yeah, the fees also play a big part. And if you want to be a market maker on a concentrated liquidity market maker, like you're probably going to have to adjust your ranges frequently if you want to do it effectively. But yeah, if you're on Ethereum, like it costs a tons of fees just to make those adjustments. So it's like an even bigger hurdle or additional hurdle. So yeah, Lifinity uses the Oracle price. So basically, it is kind of dumbed down, but like it's essentially reflecting the price that's on centralized exchanges. And because of that, it's able to avoid this toxic flow of being arbed between centralized exchanges because you're already reflecting the price. There's no arbitrage to be done, and it's not immediately obvious how this works, and like a podcast isn't the best place to explain it. The consequence of this is that Infinity's pools end up on net buying low and selling high. And so it basically reverses impermanent loss because impermanent loss is like you sell the asset that's gone up in price and you buy the asset that's gone down in price. So you end up with more of the less valuable asset. But yeah, we do the opposite of that. And we're able to do that because we use an oracle.
So you guys have your proprietary algorithms that do the trading through the constant bands and the CLMM. And so to a user listening to that right now, they think, okay, so this is a DEX that I can go to and I can trade on, but you guys aren't a typical DEX. You guys, your front end is actually through Jupiter, right?
Yeah, I guess a small clarification there is that we integrate Jupiter into our front end. So normally, like what a DEX will do is on their swap page, you can swap with the liquidity that's on that DEX and only that DEX. And then separate from that, you have aggregators like Jupiter who aggregate across a bunch of DEXs. So what we do is instead of on our swap page letting people swap just through our pools, we just integrate Jupiter so that people can get the best price across all DEXs, even if that means the swap volume doesn't go through our DEX. We're just committed to giving our users the best price. And just logically, there's really no reason for a user to swap on a single DEX, especially on Solana, because the fees are cheap. So it's not expensive to like split up your trades, even small trades, among many DEXs so that you can get a better price.
Like you were saying, the benefit of being on Solana is like even for small trades, being able for it to route to separate directions. Like I was gonna say, like when I'm on Jupiter and I'm putting a swap in, I'll often see like like through Meteora, through Lifinity, through Radio, and I'm like, wow, like I'm surprised that it would take so many routes for even just a 4 to 5 figure trade or swap.
Yeah, so like the reason or part of the reason that aggregators aren't such a major thing on Ethereum and why Uniswap still has like such dominant volume or like so many users just use Uniswap instead of an aggregator is because one, aggregators have less of an advantage compared to Solana because splitting up trades is expensive because that means more gas fees, which are on the order of dollars, sometimes like hundreds of dollars. So it just means there's fewer trades that you can profitably split up into smaller chunks. Whereas on Solana, the cost of doing that is negligible. So like this is the way that things are trending. Like as soon as people learn about Jupiter, they no longer have any reason to swap on a single DEX. So I think it's just a matter of education. As soon as people learn, they move over there and they never move back to a single DEX. So yeah, we just want to play our part in educating people how they can best execute their swaps. And as far as our DEX, like we're not trying to get people to use our front end. Our goal is more so to improve our market making logic so that we more often provide the best price so that when people swap through an aggregator, they use our pools more.
That's awesome. Yeah, I guess I got a couple points. One, the Jupiter comment it rings so true. Like you go to Bird Eye, you go to Mayan, like you see the front end put in all those places for Jupiter. And the other part was, I think when I first started learning about Lifinity, I thought it was a traditional DEX because, like, you can see it in Jupiter, and I think it gets listed as a DEX a couple places. And then when I started to kind of dig into it more, and I was talking with you, and then learning about it, it's really like a decentralized market making, and it's a way for users to get access to market making that typically they wouldn't be able to get access to. And I think before we kind of talk into where retail and users get involved with Lifinity, can you tell me a little bit more about it's like the market making as a service or like liquidity as a service and like what the goals are for Lifinity as it pertains to those two things?
Sure. When you use a concentrated liquidity market maker, so something like Uniswap v3, you as
Mm-hmm.
the LP are tasked with providing the intelligence. So like choosing a smart range to provide liquidity in, when to adjust it, when to withdraw, when to rebalance, all that. It's like a lot of complexity, to be honest, and it's more suited for bots to do, not like manually individuals on a UI. So yeah, with Lifinity, we provide a lazy liquidity provision. So basically the same thing as like a constant product market maker, where you deposit and then your strategy is like the same as everyone else. There's no room for you to like make any decisions. It's just deposit, withdraw. That's the only decisions. So Lifinity, you could say, would work like that. So yeah, we offer these two services that we've called market making as a service and liquidity as a service. Basically, we provide liquidity
Mm-hmm.
for other projects' tokens, and then we come up with like specific deals based on like their needs. So market making as a service, as the term implies, we basically just market make for them. So we're basically providing a pool, but the project itself provides the liquidity. Whereas with liquidity as a service, we do the market making and we also provide the liquidity. So the difference here is that in one case we have price exposure to the token. Say like, I mean, this is a bad example, but say that we were market making for Sol USDC for Solana Foundation.
Okay.
Obviously not going to happen, but and so if we do that, then we have to buy Sol and then pair that with USDC and provide liquidity. In that case, we have price exposure to the Sol. And so that is like additional risk that we have to take into consideration and whether it'll be worth it. Whereas with market making on a service, like they have the price exposure, we're just providing the market making logic. So we don't have to deal with that risk. Recently, we've actually come up with like a third model where we just borrow the tokens from a project. So, for example, we've done this with Bonfida. It's like an OG project on Solana.
Mm-hmm.
They've loaned us FIDA token, and then we use that to market make. And then whenever, say we're done market making, if we ever become done, then we'll just return those tokens to Bonfida. And so basically, they get market making done for free, and we get to borrow these tokens, which is nice for us because that means we don't have price exposure, so we don't have to like think about, okay, do we want to hold these tokens or not? It's like we're just borrowing them, and regardless of their price, when we return them, we just return them. So it's like all good.
That's super interesting.
Yeah, different models. We
That's
tailor it to the project needs.
that's interesting. One quick comment for anybody who doesn't know Bonfida, they are an old school Solana and they did Solana naming service. So it's like if you know ENS, you can go to Bonfida and get a whatever dot soul, and it's still live. And I'm surprised to hear that they reached out to you guys for market making because I have not heard a lot from FIDA in quite some time.
Well, I think part of the reason was they used to do a lot of liquidity mining. So you basically like pay tokens for people to provide liquidity, and this can be pretty costly.
Mm-hmm.
And inevitably, it's temporary. As soon as the incentives end, so does the liquidity. So I think there's looking for something, well, one where like the liquidity would be more concentrated, which it is in our case. And also they do provide us incentives, but it's definitely like much less than if they were trying to do this via liquidity mining in a public pool.
Like that because like here you are offering a service that's benefiting, you know, 1.0 Solana tokens. And I think like the question that I wanted to ask is, you know, you've got these two services, now you kind of have a hybrid third service. Is there a future where you're not just doing decentralized market making, you're like doing decentralized fundraising? Like you become the decentralized VC because you can support tokens like a regular fund would. You can do the market making if you want. You know, is there a future where this exists?
Oh, it's not inconceivable, but it's also not something we've actively considered. I think for one thing that probably requires a different skill set than the ones that our team has.
Totally.
Yeah, our community has like shown interest in this kind of thing. Like we have idle assets like USDC that we will eventually like use in new pools that we open, but for now is just like sitting idly in our treasury. And some people have expressed a desire to like invest that or like deposit it on a lending protocol to earn yield or whatever. Yeah, it's just tricky because like also it's like how would it work? So if we're making like these decisions like in a decentralized manner where like one token one vote or whatever, like is that even a good idea? Does the
Mm-hmm.
wisdom of the crowd actually apply to investment decisions, especially like when you're doing it like publicly, like everyone can see like your decisions before you actually execute a trade or whatever? It's kind of, yeah, it's
Uh,
really difficult. It's like totally different thing. So yeah, right now we don't really have plans to do that kind of thing.
It is interesting, and I'm not overly bullish on DAOs, especially when it comes to like running real businesses. Because I hate to say it, most people contributing in this, and like even myself included, if I was a big holder of Lifinity, like I'm not qualified to make this kind of a decision either. And like, and for you guys, we're not weighing in on the code that goes into the algorithms for your market making strategies. So I would almost be like, no, 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 you guys vet it. I trust the companies you want to put money into, and me as a stakeholder will just benefit from whether that goes well or goes poorly. But it is it's a tough game you play when you're a decentralized entity.
Yeah, yeah, totally.
But yeah. Okay, good answers. I kind of want to talk about the tokenomics because it was one of the things that actually really brought me to you guys. Can you tell me about your VE model? Is the inspiration from the curve era, and what are some of the innovations on it that you've made for changing?
Yeah, I totally appreciate that you noticed our tokenomics. It's something that's often glossed over, but I think it is a really useful model that I hope more projects adopt. So yeah, getting into that, like our V token model is pretty similar to what Curve has. It's based off of it, but it comes with a few improvements. One is optional decaying. So it's basically just like you can lock your tokens and you can choose for how long to lock them. And the longer you lock your tokens, the more governance power you receive and the more protocol rewards you receive. That's a TLDR. And so in our case, we added a few things.
Up to 4 years, right?
That's right. Yeah. So in our case, it's up to 4 years is the maximum locking
Okay.
period. So yeah, some changes we made from the curve model. One is optional decaying. So in the curve model, your tokens always automatically unlock. They're always unlocking. You can't keep them in a or in a locked state. So we enable that by default,
Mm-hmm.
and then they only start unlocking if you tell it to. The
Hmm.
Next is linear unlocking. So in the curve model, you wait for your lock period, and at the very end, all your tokens unlock all at once. Whereas in our model, whatever governance power you lose via the decaying,
Mm-hmm.
same amount, the corresponding amount of tokens unlocks. So it's like a gradual unlocking over time rather than like all at once at the end. And then
I
a
see.
final aspect
See.
is the native tokenization. So in Curve, when you have the tokens locked for the maximum amount of time, you can't transfer those. And so actually, this other protocol called Convex came along, where they're like, hey, we'll take your Curve tokens, max lock them, and give you like a receipt for those tokens that you can freely trade. But because this was done by like an external protocol, like they take a huge fee on that. I think it's 16%. So we just do that natively so that there is no taxation on the users. So if you have max locked VE Lifinity, so VE Lifinity locked for 4 years, you can convert that freely to X Lifinity. And X Lifinity is a transferable token. You can trade it. So this enables people to exit their lock position at a discount because X Lifinity does trade at a discount to Lifinity. And also, people who want to compound their stack, they can buy discounted X Lifinity and then just convert that back to VE Lifinity. So yeah, these changes have been really helpful. Have been good for the tokenomics. We have so our current supply, I think about 86% is locked, and like I think over 70% is like locked for 3 years or longer.
That's 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 Boner City, man. That's crazy.
Yeah, I think that's
How did
pretty
you
unheard
how did you convince all these people to do this?
of. Yeah, so I mean, I think
That's
like
crazy.
part of it is just it is good tokenomics. Like it works well, it serves its purpose
Yeah.
well. Another significant factor I think is our VE IDO. So this is how we raised funds for the call on liquidity as well as to fund the team for continuing to develop the protocol. And the way we made it work is that when people bought tokens in the IDO, at the same time they could choose how long they wanted to lock their tokens. And if they
Mm.
chose to, or the longer they chose to lock their tokens, the more tokens they got. I forgot the exact percent, but I think so. It started off with like 70 something percent of VEIDO participants locking their tokens, and mostly for 4 years. So like we started off like greater than 50% locked for the
That's
maximum amount of
crazy.
time. Yeah.
That's awesome. When was that IDO?
Let's see. That was almost 2 years ago, like a year and 9 months ago ish.
That's
Yeah.
crazy. I mean, honestly, congratulations. That's sick. I guess that adds right into a question I was going to ask. What was the thought process behind avoiding venture capital?
Yeah. So I mean, we have nothing against venture capital per se. Um,
Of course.
but so if you sell tokens to venture capital, like they're only going to buy it if, almost by definition, if it's cheaper than the price that retail gets, right? And so the question for us was like, okay, if we're going to sell tokens to VCs at a discount, it's like, what are we getting in return? Is it worth it? And usually what you get from VCs, or like what it looked to us like we would be getting if we did sell to VCs, was like one would just be the, what's the word, not fame, but like it's like good marketing, right? Like people see that, oh, these well-known VCs, yeah,
Notoriety.
notoriety. It's like, oh, these well-known VCs bought their token, must be legit, type of thing. And also they provide funds. I mean, so they would be providing funds before retail ever did. So like it kind of de-risks you. It's like you can get funds in a more guaranteed way than like a IDO where it's like you don't know how much you're going to get. So there's that. But yeah, like so we considered these various factors, and in the end we were like, we just liked it more if there were no VCs and we're just fully funded by our community. In our case, we 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 created some NFTs, the Lifinity flares, and that we used the funds raised from that mint to basically test our DEX at scale. So we just took all the minting funds from the flares and deposited it into our DEX to market make, and like that proved out that like our model actually works at scale. So like we were also like fairly confident that we could successfully do an IDO because we had a working product that was doing well. So yeah, I mean, so those are some of the things we thought about.
And I mean, you know what? Like now looking back, you guys are positioned as decentralized market making, offering these services. And your competitors can be construed as like institutional players. And if your backing was solely from institutional players, there would be kind of like a bit of a mismatch.
Yeah, it could be tricky. Yeah, there's always like a talk among retail about VCs dumping and I mean, it's not like there is some truth to that, right? It's like if VCs get in at a cheaper price, they're willing to sell at a lower price than retail is and still profit. So yeah,
And I
yeah, just being able to avoid
no,
that,
go ahead,
just
go
being
ahead.
able to avoid that dynamic is nice.
And I get it too. Like VCs take the risk because they're there first, and a lot of their projects probably go
Yeah,
nowhere, and
yeah, 100%.
so they need to sell. They need to make money. That's the business. But you know, it's good to see that there's some projects out there pushing back on it. And like when I hear about yours and the NFT, it makes me think of Genesis Go, and I know that like the community that surrounds the Shadow token and what they're building over there, you know, they're all for it. It's one of the things that they champion off their chest.
Hmm. Yeah, they're cool. I participated in their NFT mint too, so yeah.
Ooh. I sadly did not participate in the beginning, but I do own the Shadowy Supercoder.
Nice.
Here for the here for the here for the meme, here for the community.
Here for the shadows.
That's it. Speaking of your guys' NFT, I kind of want to know a little bit more about it. I know that you guys have a DAO that, with profits, like defends the floor price of it to a certain degree and buys them back. You know, does it lock them? Does it burn them? Is there anything that we can know about the NFT project you guys have planned?
Sure. So to give like the basics of the NFTs, um, they initially just had their own liquidity in our liquidity pools. Like they owned a certain percent of it. Lifinity DAO has bought out their liquidity, so now the Flare DAO owns a bunch of VE Lifinity, something like 20% of the supply or something. And so
Wow.
they use that revenue, so like 1/5 of Lifinity's revenue, to do buybacks, like you said. The the way they do it has varied over time. So for most of Flare's existence, we just did gradual market buys using a bot. So it just like spread out its purchases evenly across time. More recently, we've started placing bids on Tensor
Hmm.
because this just resulted in better price execution, so more buybacks. And yeah, that could change too. Another change that could happen is that part of the buyback funds get used to compound into VE Lifinity. So like instead of buying flares, just buy X Lifinity at a discount, turn it into VE Lifinity so that FlareDAO owns a larger percent of the VE Lifinity supply. Um, yeah, so there's like
Interesting.
things are always changing. There's a lot of new proposals and stuff, but yeah,
Is the
the supply is constantly decreasing. And yeah, it's always backed by a shit ton of VE Lifinity.
that's a little bullish. Do they, the ones that get purchased by the DAO? What happens to those NFTs?
Yeah, so those are governed by the Flare DAO. So basically, the Flare DAO can choose to do what it wants with them. Most of them are just held in the. They did previously burn 500 flares. They might burn more. They might not. Personally, I'm kind of like against the burning. I think it's just a meme and actually doesn't really
Hmm.
do anything to
Hmm.
price, anyways. So I'd just rather like
I
yeah
think it's really good marketing material. Like if you're trying to onboard a community and then the Flare DAO owns a bunch of the NFTs, like it's a really good way that you can run competitions and all sorts of stuff, and then you can reward loyal users and contributors in the community with these NFTs.
Yeah, I would say in our particular case, like our community, they are definitely not into that kind of thing. They're like pretty,
Oh no.
pretty anti anything that reintroduces the flares back into the supply. So like, because I guess it is a kind of unique thing that we have a deflationary supply and at a pretty aggressive rate.
Interesting.
So like they just rather keep the supply as low as possible rather than like try to create excitement via like giving flares out for whatever.
I mean, I get that. I get that. I'd have to be involved more and to see the points back and forth. I got another question: is how involved is the team in the Flare DAO?
Uh, I'm basically just as involved. I guess. I mean, so our most diehard holders tend to be like people who go way back, who are like with us from the start. and we started with our NFTs.
Mm-hmm.
So like those who are most familiar with Lifinity, as who have been with us for the longest, tend to be NFT holders. And so
Cool.
yeah, there's definitely a ton of activity on like Flare's governance too, and perhaps more than Affinity DAO. Yeah, people are making new proposals all the time.
That's cool. I like to see that. I'm all for NFT communities, and it seems like Solana has lots of them. It's kind of exciting. Like especially living anybody who lived through 2022 and that was bullish NFTs prior pretty much got slaughtered in all of their desires. And then so to see these like new communities coming out on Solana,
Yeah,
it's cool. I like it. A lot of like fun utility. You got like Flash Beasts with Flash Trade and how they can change based on how much you use it, and then of course the backpack guys and the Mad Lads what they're doing. And I'm not going to keep shouting it out. There's a lot of good protocols out there, but glad to see you guys still going strong.
yeah, Flash beasts are cool.
Uh
They seem like the next iteration of Flares or something like that. Some cool new mechanics.
mm, mm. All right, let's do a little shout out here. In the title, when I brought you in, I saw the highest revenue earning protocol in Solana. And to be honest, I only saw it because you put a thread out, kind of like doing the classic explainer that just because they're earning fees doesn't mean they're actually earning revenue in it. And it brought me back to my early 2023, like Arbitrum token terminal deep dives, trying to figure out like, okay, but how much money are you actually making? How much is just token inflation? So congrats, I suppose.
Thanks. Yeah, just to clarify, we are the highest earning DeFi protocol. We're probably not the highest earning protocol. Like there's like a few others that are high, like Bonk Bot. Like they're just raking in insane fees, like the Telegram bot.
That's crazy.
Yeah.
That's crazy. And who said memes don't have fundamental value? That on that same vein, going through your Discord and whatnot, I really, really appreciate the transparency that you guys put out. Sure, your guys' code source might be closed for obvious reasons, like your proprietary algo, but the transparency in the earnings reports and breaking down the fees, I love that, and I really want that to be the standard. And I think like the protocols, like more the tools, like Token Terminal, where it actually can try and break things down, is the direction that we have to go. It has to go that way. All this shit's on chain. Users should be able to go and see, are they making money? Are they losing money? Is there any future in this?
Yeah, wholeheartedly agree. Like the way we've set up governance from the start is like we told people like, hey, we're gonna let our community govern the things related to money, like our funds and how we use them. We're not gonna let you govern how we do the market making because you don't have expertise there anyways, and you probably don't care either. And like similarly, uh, you know, it's because people care about how funds are used and like the money aspect that it's great to have transparency with respect to those things. Um, and like there is a ton of confusion. Like you referenced that dashboard that I talked about in one tweet. There's like a lot of this, right? Where it's like that dashboard was talking about like it has like different like panels you can choose from, and like one is just like fees, and it's just like for example, some DEXs it just shows their like total fees generated, which includes like everything generated for LPs, which means it's not captured by the protocol, but it just but like people don't see these kinds of nuances. And then there's also a lot of or like people tend to just like go towards things that, oh, like this DEX has the most volume, so it must be the best DEX, or like shallow thinking like that. So I really do hope there are more dashboards that like take all these things into consideration, and also like not just the fees generated for the protocol, but also like the costs incurred to get that volume. Like, are you doing liquidity
Mm-hmm.
mining? Well, that's probably a significant reason you have the volume to do is because you're like paying people to LP on you. It's like stuff like that. Yeah, it's difficult because like not all these things are transparent. So like you have to do a bunch of digging just to get these numbers for each project, and it's a lot of work. And I know this because like I did it at least once to write an article, and it's not easy. You have to ask questions in discords one by one. It's just like really cumbersome, but hopefully things improve.
It's so damn true. The research that I had done, and then at a certain point I realized like it's going into a Discord and demanding these numbers wasn't fruitful because it's not the norm or the standard to have these numbers. And so I kind of like, I kind of gave up on like trying to shepherd that in, because I mean I'm not a tool builder. I'm just there stamping my hand and asking for these things. So hopefully with Flipside and then all the tool sets that are recently being built out and the better wallets and the better explorers, like we're moving down the road of these kinds of answers. And then again, though, it's like if a protocol is closed source and they don't want to make the information available, now you guys, as I said, are closed, but for obvious reasons, you're making it available. And so, we can put a stamp on it there, but I applaud it. Good work.
Appreciate it.
Yeah. Okay. Let's talk a little bit about let's talk about Project S, or not, I suppose. You tell me whatever you can and cannot.
Yeah, so there's not much I can say. Project S, we're basically trying to create a whole new market on Solana that does not exist yet, but I think there will be demand for this kind of market because it does exist in another ecosystem. So yeah, I'm confident about that. It is also a place where we will be able to use our idle liquidity that's just sitting in our treasury, which is I think that's about the extent that we can talk about it right now.
And it will be Lifinity brand or under the umbrella.
Yeah, definitely under the umbrella. Like we are building this using our funding from our VEIDO. So in other words, like our token holders funded us building this. So it only makes sense that the value accrues to them in one way or another. So we're not like building another totally separate project and like shafting Lifinity holders.
Maybe this is the Boner City moment. I'm unclear. Okay. That's good. Let's get a couple tough questions for you. Does the team plan to stay anonymous into the future? And the reason I say this is I brought up on multiple occasions that I'm happy that this kind of new Solana 2.0 quotation marks is more doxed. I went to my first conference for Breakpoint and like got to meet teams, and people are kind of taking on this more shepherding role, and that's not to discredit your guys' choices. You can do as you please, but I just kind of want to know maybe what your thoughts are into the future.
Yeah. So we don't have plans to de-anonymize. We do value our privacy, and I guess in addition, like we don't really
Mm-hmm.
see much of a benefit to de-anonymizing. I think the point in
Mm-hmm.
time where there's the greatest benefit to de-anonymizing is before you launch your thing, but because like that's when people trust you the least, right? It's like you have nothing to show. People are much more concerned, and for good reason, that you might rug.
Mm-hmm.
So, but like we're well past that point. We have a great working product and a community that knows us well. So yeah, and there are some ecosystem people, Solana ecosystem people who do know our faces or have met us in person. So we are doxed to some, but yeah, I guess that's our stance on it.
No, I like it. You guys are you're vet doxed, and it's like you said, you launched almost 2 years ago. I mean, the protocol and liquidity, it's all yours anyways. So I mean, you'd be rugging on token price, and for some reason, that just doesn't seem very viable. So, like I said, I respect your. One more tough question. You told me that you guys would really only prioritize an audit if the community really wanted it, and you had that sort of minor exploit in December. Just kind of walk me through that process of maybe why no audit and like where your head is right now.
Yeah, so we did have that unfortunate event where our pool had a bug, which ended up in us losing
Mm-hmm.
500K. This was like
Mm-hmm.
0.5% of our protocol owned liquidity, I think. So in the grand scheme of things, like still we're all right, but yeah, definitely unfortunate. Yeah, we are an unaudited protocol. The
Mm-hmm.
reason we haven't audited is a twofold. One is that it costs or that it requires a lot of time, and the other is that it costs a lot. And in particular, in our case, our DEX is not immutable. The code is not immutable, and we do make changes to the code. And this means that if we got audited and then we make an update to the code, then we would need to be re-audited for the audit to like actually apply to the whole code base. So yeah, audits would be ongoing, and that means it's even more costly. And then with regard to the time aspect, if we're working on an audit, that means less time on the other things we could be doing. And those who know us, like, we're very focused on profitability, and so we usually try to prioritize the thing that results in the greatest increase in revenue. So that usually means like optimizing our existing pools or opening new pools. And yeah, so we've communicated all these things to our community. I think they are well aware of these trade-offs. I know we've talked to them about these things a few times, and still, like, our community hasn't like voiced a strong opinion like, hey, you guys need to prioritize an audit above all else, or else we're leaving or whatever. I mean, there were like a couple individuals who like brought this up again when the hack occurred,
Mm-hmm.
but yeah,
Mm-hmm.
there at no point has there been like a strong push from like the collective community to prioritize audits. So I think they are on board with our decision to not prioritize that. But yeah, I mean, we're always open to changing, of course. So like at any point in time, if the community like changes their view on that, then yeah, we will definitely pivot to prioritizing an audit.
Yeah, I mean that's fair. I mean, if the stakeholders are in your guys' court for what you're doing, then I don't see a reason to change. The other thing is, just because you're audited doesn't mean you're safe as well. And I think the only other avenue is I've kind of been pro bug bounty for a while, because it's like it gives hackers an opportunity to be white hat hackers and earn. So I don't know if that's something you guys have thought about as sort of like a middle ground.
Yeah, no, that would work. I guess the one thing that makes it not work in our case is that we're not open source. The reason we're not open source is because
Yeah.
it's tricky. So like we
Good call. Good call.
we limit the liquidity in our dexes. This is another thing that's very different of how we work compared to other dexes. Is that we actively limit how much liquidity we have. We don't try to maximize like basically every other dex does. And this is the goal of doing this is to maximize profitability. There is a level of liquidity that maximizes revenue. The more liquidity, the more fees, but we're also optimizing for reversing impermanent loss, right? And the more liquidity you have, the greater risk there is there. So it's not the case that the more liquidity, the better. All right, so we limit liquidity, and that means that if someone else can just copy our DEX, the code, and then just put more liquidity in that means that our yield gets diluted, and they put like zero effort into it. They can do it effortlessly, and so that's the reason why we remain closed source, is because like basically there's alpha in our code, and we don't want to give that away for free. So it's unfortunate, yeah, but we can't do bug bounties.
No, no, that's fine. That's non-tech nincompoop. So thanks for picking that up off the ground. All right. Well, this has been fun. Before we close out, I do want to know, what was the inspiration for going Fight Club?
Yeah, I love the movie, and Tyler Durden is really dope. Some ways more than others. Yeah, and so in some ways, I aspire to be like him. My Twitter handle is Durden wannabe, and I'm definitely not as cool as him. There's some admirable aspects of Tyler, so yeah.
The anonymous takeover. I like it. All right, sir. I guess you just told us where we can find you on Twitter with Durden wannabe. Otherwise, is it just at Lifinity?
Lifinity_IO.
Excellent. People check it out. And then now, before I let you go, there's one thing I like to ask my guests. What is the thing that's kept you sane during the bear market, sweeping into this new bull market, whether it's exercise, eating, whatever it is?
Yeah, so I live in Japan, and one of the things I love to do is go to the Sento. Sento is Japan's public baths, and these often have saunas with them, as well as a cold bath. So I often like get in the sauna, get in the cold bath, take a break, and like repeat that. Like, there's actually a lot of research coming out on cold plunges as well as like saunas, like separately, and it's like it's very good for your health. It really like refreshes my mental state.
Nice. I'm actually going to go do that in a couple
That's
hours.
it.
So I respect the game, sir.
Nice.
Well, thank you again for coming on, Durden. I appreciate your time.
Likewise, appreciate you inviting me on.